You are listening to chartingwealth.com for Thursday, the 11th of October, 2018. We see the stock market down very hard for the day. The S&P 500 down 3.18%. The Qs, that's the NASDAQ 100, down the most, 4.41%. We see bonds down and gold up. Let's jump first into the S&P 500 on the weekly chart. Looks like we will probably have, unless there is a gigantic up day Thursday and Friday, we will have a weekly vertical crossover going down, I predict, at the beginning of the week. But again, we don't call it until it happens, and the weekly candle doesn't draw until the end of the week, but we have definitely seen a big slam down. Derivative oscillator gaining downward momentum, price percent oscillator headed down strongly. Of course, we see a huge drop off as we look at the 2-day chart. Again, heading down quite strongly. 3 down candles. This latest first day of this latest down candle, down very, very strongly. And it will finish drawing, of course, on Thursday. But again, derivative oscillator spiking down, price percent oscillator heading down. What do we see on the 4-hour chart? We see down movement in the morning and then a real slam down in the afternoon after a prior day of up movement. So again, we see things really rolling off the deep end there on the S&P. But of course, we were not in an S&P trade yet because we didn't have a weekly vertical crossover going down. But what did we have it in? We had it in the Qs, and you guys have, of course, been in that play for a while since we had that 4-hour chart roll over. Remember, we had a weekly vertical crossover back on the week that ended Friday, the 21st of September. Following week, we had some up movement, and then we started seeing down movement. And, of course, we see the derivative oscillator gaining downward momentum, price percent oscillator heading down quite strongly. We look at that 2-day chart, and we see 2.5 down candles, lots of strong down movement, huge spike in the derivative oscillator, price percent oscillator spiking over, headed down quite strongly. And then we go to that 4-hour chart. Now, of course, our jumping in point was there on the afternoon. Well, after the afternoon down move, we had that jumping in point after the morning on Thursday the 4th, and we saw nice strong down movement. Again, things went up a little bit on Tuesday and then, of course, spiked on over. But we were, of course, in that practice trade after we had that week, that 4-hour crossover going down. It didn't give it to us easily this time. As you remember, after we had that Friday down move, it took a while. Market went up, but again, we never saw our 2-day chart crossover going up, and we never saw our weekly chart give up the ghost. And then that 4-hour chart after the pullback gave us the jumping in point, and that is where we have seen the big virtual gains on a down move, on an inverse trade or an option, a put option call. So things spiking down quite strongly. And that has been such a nice gainer for us. Again, that is what's beautiful about having a little bit of knowledge about how the chart works and practicing your inverse trades. And that's what we've been seeing here on the Qs. Now, let's move from stocks to bonds. Now, remember, we also had a down move that occurred on the weekly chart when it crossed over going down back on the 14th of September on bonds. And bonds have been going down strong since then, actually before then, but we don't look to jump in until we have that weekly vertical crossover because we are trend followers. We are not guessers when it comes to the market. Derivative oscillator gaining downward momentum, price percent oscillator spiking down, and of course our Heiken Ashi candlesticks continuing to move down quite strongly on that weekly chart. We go to the 2-day. What do we see there? Well, of course, we see things continuing to move down quite strongly. Biggest down day as far as 2 days as far as down candles go, that 2-day candle ending on Friday the 5th of October. But then these latest 1.5 days, 2.5 days rather, have been down quite strongly, and we'll continue to watch things on that 2-day chart. This latest 2-day candle will, of course, complete on Thursday at the end of the day. So do keep your eye on things. We're right around the same level where we have been hitting as far as those 2-day candles go, but that price percent oscillator makes us feel comfortable even though derivative oscillators lost a little bit of energy. And let's check out that 4-hour chart. We, again, as I was telling you, we see things sort of heading down and spiking. It was a down day, and again, we're looking at our Heiken Ashi candlesticks. So what are they showing us? Well, they're showing us, again, a sideways slide, and we are approaching that 2-day trend line and a crossover. So keep your eye on the prize. As we said, we had that real spike down back a couple of candles ago on those 2-day charts. So watch things. Down for the day, but again, we're following both our Heiken Ashi candlesticks and our price percent oscillator and derivative oscillator, which has gone positive on that 4-hour chart. So keep your eye on the prize there. And lastly, we're going to go back to the weekly chart. We're going to go to gold. What do we see on gold? Well, we had a weekly vertical crossover going up on gold at the end of the week on Friday the 5th. And so far this week, we have a red down candle in our Heiken Ashi candlesticks. We still have the derivative oscillator positive and growing, and we have the price percent oscillator crossing over going up. Like I said, gold up for the day, 0.28%. What's that 2-day chart showing us? Well, we had a down candle, that last full 2-day candle. In this latest one, it is a green. Well, we'll have to tune into that a little bit. A green up candle, but it has quite a wick on the bottom. We see that the price percent oscillator is heading up just barely. Derivative oscillator pretty much maintaining the status quo. We go from the 2-day chart to that 4-hour chart. And of course, we don't have a crossover going up yet. That's what we're waiting on. After this pullback, after we had that weekly vertical crossover occur, we've not had a jumping in point for an up move. So until we have that 4-hour chart crossover going up, we're just going to keep our powder dry on gold. Folks, that's where we are. Exciting things going on in the markets. Continue to follow this. Hope that you are in that Q's trade, and we hope we have the settings for a down trade in the S&P 500 after that weekly candle finishes drawing on Friday. We'll keep you posted with our comprehensive review and forecast, and in the meantime, we'll get through Thursday and Friday and see how things continue to develop. God bless. All the best from us here at Charting Wealth.